Hello everyone, it's Mark here at TSLA, and unfortunately Tesla closed in the red today. You're seeing the closing price here of $249.70. That's a decline of $1.75 over yesterday's price, and in percentage terms it's negative 0.7%. Now, being red doesn't necessarily say much for how the price action played out. It wasn't like a sell all day type of scenario. Tesla did gap down. It gapped down kind of with the rest of the market. It was down 0.9%. And then it proceeded to sell off down 2.5%. It quickly found some buyers, and it went up almost 2.4%. And then by Wall Street lunchtime, it went ahead and sold off another percentage and 1.75%, and found some steady buying all day long. Now, I would say that this wasn't similar price action necessary to the rest of the market. If you're looking at the S&P 500, here's SPY representing the S&P 500. In this ETF, you did see kind of that gap down. It was 0.6%. And then it proceeded to sell off for the rest of the day until around 11 a.m. Eastern for a total drop of 1.25%. So Tesla's 2.5% kind of lines up as far as beta goes. But you notice there wasn't strong buying into the lunch hour. And it was just kind of a smooth wave up all day long. This would have been a great trade if you're long here at 445, or Tesla's trade, it was just a little bit messier because it had that sell-off. Now, why do you think that sell-off occurred? Well, I would say that if it wasn't for Rivian's earnings today, we would have a little bit of cleaner price action. And we can just confirm that. Let's just humor ourselves and just compare Rivian and Tesla. So if we were to move our little chart here, you'll see the price action is relatively similar. It had a sell-off in the morning, some buying into the late morning around 11, it stopped. It sold off a little bit, and then some steady buying through the rest of the day. Now, to be fair, Tesla's buying wasn't as strong as Rivian's, as Rivian actually went pretty positive. I don't know if it was like 3%, and sold off and de-risked to the end of the day, whereas Tesla didn't really de-risk because it didn't have earnings. But I think there's sympathy movements here. They track relatively closely. You can even look here for the past 2 days. The sell-offs are very similar. It's almost like the sector is kind of facing the same headwinds, and they're moving together. It's not all that surprising. I did think Lucid did go pretty green today on their earnings. Oh well. So let's turn off Rivian, and we can understand a little bit better about Rivian's price action. Let's take a look at some brief news real quick. And that news is just going to be basically why stocks firstly gap down. And we're looking at a CNBC article here. It's talking about how China's imports and exports came in much lower than expected. Now, I did say yesterday that we would have a vacuum of data drops, and that was my assumption, that the Chinese data drop wouldn't be so severely dire. Like they're purely in deflation territory, something that Elon Musk has warned our country about if we proceed on the same path of rate hikes. But, we find ourselves here. So it says in the highlighted area, China saw a 14.5% year-on-year drop in exports, while imports came in 12.4% lower year-on-year. Economists polled by Reuters expected a 12.5% slide in exports and a 5% drop in imports. So basically, no one inside their own country, has much demand for product. No one outside their country has much demand for services and product from China, like severe drops in exports. This is something that they compare to like the drop during our COVID-19 lockdown. It would be similar to something like that, yet we're not having the type of that kind of pandemic catastrophe. There is no some type of like existential event that's happening in the US or the rest of the world. It's just that outside of China and really inside of China, there isn't much want and desire to spend money. If you have money, you're trying to retain it. If you don't have money, you're trying to make it, and you're not really making enough to cover your living costs for when you factor in inflation and what have you. So this could be in the markets reacted to this is because the exports are really a sign of how the Western world is wanting services and product. And if we have no want because we have no money, does it signal the actual recession is coming instead of the soft landing that everyone's talking about? So it kind of spooked the markets, and the markets actually sold pretty severely in the futures. Those are the types of moves, and I've said it before to other people, but there hasn't been many 1%, 2% drops in the market outside of moves during the futures or pre-market or post-market, because the idea of hedging is just so easy during regular cash hours. Like, buying some 0 days to expiration puts can kind of secure a whole portfolio against a sudden drop, be it some news drop that happens during the course of Wall Street's regular trading hours. So when things happen outside of regular trading hours, they can cause these kind of sell-offs to occur because people are kind of wanting to get out anyways. Like this has been a sell the rip type of market for many days now. And you're noticing that we talked about it with Tesla. Like if you ever see Tesla gap up, you're going to want to short that immediately, especially if it gets to those $2.50 increments as far as strike prices go in options, essentially meaning that, somewhere along the lines, anywhere above the open is going to be max pain for Tesla for who knows how many weeks. Like no one's really expecting Tesla to move violently upwards. They're okay with it moving violently downwards because people are pretty pessimistic on Tesla's near-term future. So we talked about Lucid, and Lucid has some earnings, and Sawyer Merritt kind of summed it up for us. Essentially, they are losing less money than people have expected. They're made a little bit more money than people expected. Their gross profit had increased by $35,000. Now, do note that they're still losing money on every vehicle that they make and sell. So they're losing, hundreds of thousands of dollars or something like that. Well, they're burning through cash like crazy. They have $9.26 billion cash on hand. I don't know if that's cash equivalents, but they're burning through that relatively quickly. That's $2.5 billion down from Q1. So maybe they have a year and a half of cash in them, perhaps. They do want to expand their factories and their production lines, so CapEx will go up. But let's just all admit it. This is a little bit similar to the Lucid situation, where if Lucid got themselves in a bind due to the large investment by the Saudi, I don't know what fund it is in Saudi Arabia, but the Saudis would backstop any failure of Lucid. And you can see Amazon and Rivian kind of in that same relationship. The comparison is there where Amazon has a decent sized investment in Rivian. And especially because, Jeff Bezos hates Elon. He would love to have a competitor to Tesla anyways, and they would keep Rivian afloat, if anything, just to make all the Amazon delivery trucks that Rivian is promised to make. Now let's take a look at some Chinese inflation data. I'm actually looking to see if the inflation data came out, and it's one of the reasons why I'm a little bit late in recording this video. Let's see if we can find actual negative 0.3%. Okay, so let's see how the market is reacting to a negative 0.3% instead of an estimated negative 0.4. And this could affect our futures as well. So now we're seeing the HSI, which is the Hang Seng Index. Maybe this isn't the best comparison, but it is the Hong Kong Stock Exchange. And it is currently down negative 0.56%. How did our futures react to that? If we're watching the US 500, nothing. NASDAQ, US 100, nothing. So it's a nothing burger. Inflation is not that high in China. They are basically in deflation. So we can continue looking at the chart. So now that we're checking out Tesla, we can look at a slightly larger time frame and maybe a 15-minute time frame. And we were hoping that Tesla would kind of find some buyers and get into a higher high type of scenario. Unfortunately, that didn't happen. That's what we kind of wanted to happen. Now, could it still happen? I think it would need to happen. We would need to go green and make a high tomorrow. I think since we sold off before CPI, which is Thursday, it would kind of make sense that we shouldn't be selling off every single day before such a print, because if the print comes in good, how are people going to be positioned? That's a good question. That it could be selling off just to be better positioned for a run up when CPI comes. I would really like to see Tesla get into this area where it's beating the high from this Monday open. If we can get Tesla to go 1.8% somehow, some way, like that's what I really, really want to see. Otherwise, if we keep making lower highs, it's really just not great. Get rid of that line. It's just really not that great for Tesla's price action. It's actually pretty worrisome because I've kind of highlighted it in these green flagging lines here that Tesla has been flagging considerably during its sell-off here. It's not making higher highs, not at all. So we have the green lines to represent some flags and some levels. Let's draw some other lines to represent how we are just not making any notable highs here. Like it's always lower highs. Whenever a high could be taken out, is sold off immediately. You can see from all these peaks that are touching our downward trend line from the sell-off from earnings, it's really just a very bearish context, and we really need to make a high. Otherwise, it's just not looking good. Now, if we can make a high that's higher than the Monday's open, it would be pretty similar to the bottom of the range that we were contending with, which was the 255. I think max pain is around 255 currently right now. I know it's pretty early in the week, so it doesn't really matter. But yeah, it's just, I would say this. If we're going into Wednesday and we're red again all day long, I mean, I would take a flyer on a good CPI number coming in on Thursday, and maybe some cheap calls. This is what I would do. This is not financial advice. Obviously, buying calls on Tesla is just not ideal. But if we're kind of suppressed in our price action again, I mean, you kind of have to bet, like, how much more can it go down? The answer is it can go to zero. But from a shorter time frame, it's been selling off consistently, constantly, relentlessly. And is it due for a bounce? Let's find out. Let's look at the hourly. The MACD is just depressing. Yeah, I mean, it's curled up. It doesn't really mean anything at all. Like, stochastic RSI is nearing a top. But, stochastic you can see here that just because it's topped out doesn't mean it doesn't go up. It can go up for a while. The thing about the RSI, though, it's been on the hourly, it's been so dead, just completely dead for 2 weeks now. I don't know how long it's been, like over 2 weeks. For 2 weeks from now, it's been doing nothing. There is no interest at all in Tesla. So knowing that the RSI is really low, and it's been low for a very long time. Can it stay low? Yeah, I can stay low for a while. Is there good examples of that? April of last year, maybe, which was dire from all the inflation prints that were coming out. It can stay topped out for considerable amounts of time, like kind of when our run-up started here in spring, and it's kind of stayed high for quite a long time. But yeah, like is it bound to go up? Does it need to go up? It doesn't need to do anything, because the CPI number will really determine the future of the entire stock market. Like, because we're not going to have the FOMC meeting for 2 months, every little bit of inflation data is going to determine if there's going to be another hike or not. If core inflation doesn't come down, there's another hike. I mean, and if there's another hike, that means Tesla's going to be hurting even more. And we kind of have to be prepared for that, right? Like, if we can get a little bit of green tomorrow, if we're red in the morning, I would probably buy like a weekly call just for a lotto ticket on a good CPI. Though, to be fair, if I was to give advice like that was to a family friend or something like that, I'd be like, hey man, maybe not Tesla. maybe not Tesla. Tesla doesn't have a lot going for it right now. You can listen to all the Tesla bullish news you want to on YouTube and Twitter. They're talking about how they're making they're expanding, Giga Nevada, and they hired a new project manager to build out the two new facilities. Well, modifying one and building the other. You can talk about how Model 3 Highlander is coming out and Cybertruck is coming out. But you would have wanted to hear about delivery dates or handover events for Cybertruck already, right? Like, we are in the midst of Q3 where it is supposed to be released. We don't have an idea of how much they cost, which trim is going to be available. When it comes to Model 3 Highland, we don't even know if they started production on that. There's all these rumors coming out of China, and they're all fake news. When it comes to real tangible things that will move this stock, it's really the idea of the Cybertruck adding more revenue, getting production numbers up, hitting 2 million cars for this year. This is really basic things like that. As much as we can talk about energy, Tesla energy all we want, and mega packs and what have you, like, first of all, those things are backordered for 2 years. So yeah, we can reduce costs on them and get great margins on the mega packs, but we really need to sell hundreds of thousands of more cars. Like, until there are like 2-3 other mega pack factories, that is going to be a constrained number. That is not going to be, that's not going to grow until we scale mega pack production as well. We need to scale Cybertruck production. We need to scale Model 3 Highland production. Do we need to modify more production lines for that? Will that lower production all across whatever factories that's going to affect, be it Fremont, or is it just going to be in Shanghai? We don't know those things, and those are all things that can affect the stock, but also can affect the stock in a negative way. Like, what if the Cybertruck comes out and there's some bug in the software, or there needs to be some recalls? It might not be a smooth event necessarily. You might get a pop when you hear about the date, and then it'll be a sell the news type of thing when it's delivered, perhaps. But in the near term, the only thing that's going to make this stock go up is inflation. But that begs the question. It's like, okay, so if inflation number comes in really cool, PPI comes in great too on Friday, like, what's going to happen? Well, is Tesla going to rally more than other stocks? I mean, I kind of highly doubt it. Like, right now, there is just not a lot of great sentiment over our stock. It's just the truth. It's just the reality. No one wants to buy this price action. I mean, no one wants to. If you were to ask someone who doesn't love the company, who doesn't follow Elon Musk on Twitter or X, and you ask them, okay, look at this price action, or just look at the historical price of Tesla, just the stock price itself over the past, you can say the past month, you can say the past 2 months, 3 months, for the year to date, and ask them, like, where would you want to buy Tesla? Like, if you just wanted to start an investment, do you want to buy, $50 from the recent high, or what is it, $50 from the recent high, or do you see any buying opportunities down below? And I've asked this to people. I've asked people this before, and they always say it's going to be around like the $200 mark. It's going to be around the $170 mark. And you can say to yourselves, well, we're not going to see that again. I've heard many people say, we're not going to see that again. And you know what? I hope we don't ever see this ever again, unless it's something like stock split, which would be great because then I can sell more covered calls. But let's just go super bearish mode right now. Just to remind ourselves, to get down to the top of the gap, it's 3.25%. That's like 1 day for Tesla. That's like half a day for Tesla. Just to get to threaten the top of the gap, and that would make a new lower low. To get into the bottom of the gap, it's only a drop of 5.8%. Tesla can do that in a day. To kind of sit in the middle of the gap, it's 4.6%. How about in a really dire scenario where it gets down to $200 strike price? It's just 20% from the current price. 20%. What about if we went to 170? Like, I've heard 3 or 4 people in real life tell me that's maybe when they'd buy. That's 32%. What is the drop from the top of this consolidation in August of last year from Powell's speech in Jackson Hole? 15.65%. And how long did it take to go 15? It only took half a month. So far, from the top of the pre-earnings pump to the closing price now, it's 16.6%. So we're getting kind of out of the range of a typical consolidation, maybe. Yeah, so max is going to be around 24%, but other typical ranges that we've talked about, well, that's actually 26%. So we could maybe see, just based off how Tesla's price action has consolidated and ranged, 26%. What does 26% look like? 25%, how about? That actually at 26% will clean up a gap at 221. That'd be yikes. That'd be $221 a share. That can be done at this rate in no time flat. Like if inflation comes in really bad, that's going to be like a 10% negative week for Tesla. So one thing I want you guys to do is I can't make you guys do anything. It's not financial advice. Okay? Not financial advice. What I would do is, okay, these are scenarios. If Tesla is red in the morning, I probably will go long for a cheap, like weekly call. If Tesla's green, somehow, some way in the early morning, it's up like 2%. If we're anywhere near Monday's high, I'm probably going to sell calls against Tesla. And depending how the price action works out, meaning if Tesla stays flat for the rest of the day. So let's delete our yellow squiggly line and let's draw out two scenarios and what I'll do in those scenarios. Okay, so we know 255 is currently around where there's too many calls piling up. And once again, there's too many calls in the system for Tesla. I don't know what everyone's doing. Everyone keeps buying calls and they're getting destroyed for 2 weeks. They're getting destroyed. Okay, anyways. Okay, so let's say in the scenario that we gap up, I think a gap up would be something like 0.3%. So that would be around 250. Okay, 250. That sounds like a nice round number. Let's say we open at 250 and 30 cents. And you kind of go up a little bit, you sell off a little bit, and you kind of base on the top of this green candle. So we'll kind of just consolidate like that. We'll say that's one particular type of price action. Flat, basically. Gap up and flat. If that's the case, I'm definitely selling a call. I'm definitely selling how many calls I can sell. I'm definitely going to, and depending on if it does dip in the course of the day, I will buy a call. A call for this, hoping the stock goes up. But what if like it gaps down? Let's take a look at the Hong Kong Stock Exchange Index again. And it almost had a gap close and it sold off immediately. Let's look at the futures. Futures kind of reacted to that sell-off a little bit. It doesn't look as dire as it was yesterday. Now that could change. We saw it sell off in the futures all day, all night long into the open. But if it gaps down because of whatever China's doing again, let's say we would gap down like 0.5%. What is 0.5% from the close? It is going to be, oh yeah, great, right on the diagonal, on the flag. Okay, it would be somewhere around there. So let's say if it gaps down, it'll probably sell off. And as the day goes on again, it'll probably get bought up a little bit, but not, once again, it won't close the gap and it might go up again towards the end of the day, something like that. Now, what I'd probably do here is this. If there's a decent sized move down, like 1.5% from a gap down, maybe somewhere in the range of 1.8 to 2% down for the day, I'll probably close out my covered calls that I have currently. So I'm always sitting in covered calls, guys, because we're watching this price action is very bearish. And I'll probably wait to see if there's going to be any buying through the rest of the day so I can sell calls at a higher point. So let me change the color of this line to something else. Let's say purple. So if it drops and gaps down from any Chinese shenanigans in the stock market over there, I will then probably close here around 245. Hopefully that doesn't go too bad for me. And if it gets any buying, then I can resell the calls again. If it does get to around 245, the mid 240s area, I'm probably also going to buy a call again. So scenario again was if it gaps up and it sells off a little bit, like wherever I think it might be the bottom on a gapped up day, like be it maybe it will close the gap, maybe it will sell off all day long, but whenever the bottom is for tomorrow, that's my idea of when to try to go long probably. If there is a gap down, I'm going to look for another opportunity to try to go long. If it's severe enough, you want it to be cheap as possible. This is not a sure bet. This is definitely like gambling, right? And if it gets bought up, then I'll sell calls against shares again for some hedges into Thursday, which I think will be pretty important. And of course, PPI will be on Friday. So that's the type of scenarios that could be in play. Let's look at China again. Maybe based. Futures are still a little bit up, but you can see how they're very sympathetic with each other. They kind of sometimes move like this together. And I'm not saying that's great, but China's been really hurting. Really bad. And they've been selling off for a while. They're basically pulling a Tesla. And there's this idea that it was being spread amongst mainstream media and some other personalities on YouTube or Twitter that China is a really good investment, that ex-USA is a really good investment, meaning stock markets outside the USA. I just don't know if I completely agree with that. I would say that the stock market in the US is the strongest, the most resilient. We have the most resilient workforce. We have very low unemployment. Do you really want to buy stocks in countries that have youth unemployment over 24% or whatever is going on in China? Do you want to buy stocks in a country or in a continent like Europe who's facing a war, who's facing they don't have any self-reliant ways to generate electricity in large amounts other than maybe nuclear? They've shown that their renewable resources initiatives have been costly endeavors that haven't given them the real, how do I say, energy security that they need. Their food costs are going up. The Ukraine grain deal has ended. And I know that really affects more maybe North African countries, especially like Egypt, what have you, where they really are reliant on grain imports from Ukraine. But all these problems all over the world, I still like U.S. stocks a little bit better. When it comes to Tesla, I love Tesla. I love the company. I'm a humongous fan of Elon. I follow every word. I'm hanging on every word he says on X, or I'm watching every interview. I'm watching news and reading news as it happens during the course of the day. But the reality, this is just not the best stock if you're trying to swing trade it. If you're trying to day trade it, it's not clean. It's not. The moves are so erratic that you're gonna get stopped out. If you put any type of stop loss on your trade, you're getting stopped out every day. If you're trying to swing shares, you can say what are your levels to swing? You're gonna buy shares here at $249 when you know that everyone's eyeing this $15 drop in price. You're gonna do $15 per share. I mean, if you're a long-term investor, I would say this. There's a lot of people that say you can't trade Tesla. If you're trying to trade Tesla, you're going to lose every time. I mean, I would say that is kind of true if you're buying calls. A lot of people are buying calls. You can look at the options chain. There's a lot of open interest. You can look at MaximumPain.com or whatever service that you use from your broker. You can see a lot of orders being placed. There's a lot of flow for Tesla always. I don't think the volume is all that great right now, but regardless, it's still very heavily traded when it comes to options, when it comes to shares being purchased and sold. Tesla's really, really popular for that. But when they're that popular, the people that are selling these calls, they don't want the stock to become in the money for all the calls you're selling. The premiums are high. And if they can suppress the pricing, they'll collect that high premium and not get their shares called away, not have to come out of pocket for those calls. So there's a lot going against Tesla. So even though we have a big, we've been selling off as a stock market, we can let's go on an hourly. Let's look at S&P 500. S&P 500, this is either a sell-off or a correction. It saw down 3% and it's currently down 2.4% in a matter of about 2 weeks. I know for people like Tesla fans, that's nothing. If you drop 3% in 2 weeks of Tesla, you're high as a kite, right? Obviously. 2 weeks for us is 20%. Not fun. But you're seeing that a lot of the stock market sold off, maybe not severely as Tesla, but there has been a correction in the stock market. But there is cleaner setups for trades for Tesla. So if you're trading Tesla, and if you're a long-term investor, you don't have to trade Tesla like how you hear other people trading Tesla, buying a bunch of calls, swinging like hundreds of shares. I would say, like, if you're a long-term investor at Tesla, you have a bunch of shares with you. I think that I'm not saying this is the best time for it because we've sold off like 20%, but if you could actively manage your portfolio and you understand the idea of the calendar spreads that we talked about, you could have made a lot of money selling calls before earnings. You could have made a lot of money even just selling calls the day the market opened, when the day after earnings. That you could have realized a drop of almost 11%, if you would have sold calls. Those calls would be basically worthless by now. You would probably be making pure profit on them, and then you would have a hedge against the volatility and the loss of value of your shares. So if you're listening to this and you're a long-time investor in Tesla and you've been kind of scared to get your shares called away, think about the idea of a calendar spread for your options. We talked about it in other videos, and you can research it yourself. It's selling calls against your shares, and when the opportunity arises, you buy a call. You actually buy a call instead of sell a call for nearest to the same strike that you sold your call for, but closer dated. So it can have more volatility, and if the strike price hits, you can buy back the call you sold with the proceeds of the call you bought. Now, obviously, if we're looking at this now, that upside hedging is really not completely necessary from the very bearish patterns, the very bearish price action, the bearish sentiment. If you didn't watch yesterday's video, we drew these curvy yellow lines as a possible inverse head and shoulders. It's still kind of in play, but we would need to see a higher high eventually, right? We need to have a neckline drawn that isn't so severely slanted on this head and shoulders pattern. It would need to be something like $257 a share. It can have a little correction down to $250, and then a little bit more buying to finish off the bottoming pattern. But we've talked about bottoming patterns a lot over the last couple of weeks. None of them have played out. And in reverse of that, if you look at it from different time frames, these are all very bearish patterns, right? So everything, like I mentioned before in the first part of the video, all these green lines and diagonals, these are all very bearish bear flags. They're very obvious flagging. On a bigger time frame, we were hoping for a descending wedge, a falling wedge. That would these two blue lines, they would have kind of predicted a reversal of the drop. Now, of course, patterns don't mean much. It's just that it's just something to look out for. But you can see it just falls right through. Now you can adjust the falling wedge into calling it just another flagging pattern, this channel. And is it respecting it? It kind of is respecting it for now. It's respecting the top line. It's respecting the bottom line pretty cleanly. So you can see, like, if you line up our cursor, you can see how to break into the gap. Okay, to break into the gap and to break out of this channel would put you into CPI Thursday. And so it really, let's watch tomorrow's price action. I really would love to get into the middle of the channel, at least to give us a chance to go up or down. But if you're kind of red tomorrow, you're really not that far away from breaking out of this pattern and falling through, because we'll get to the brush, we'll draw to Thursday's open. Just kind of a diagonal down. And this would be Thursday's open. We'll change the color to this lavender, light purple. And you can see how this would get you into the gap. It would get you to the bottom of the channel and kind of threaten to break through on CPI's open. And the market likes to put pricing in points where, they know we're watching these patterns, right? They know that their algorithms are either buying off these patterns and supporting the price it's basically just to make their entries into their shorts a little bit cheaper. I think it's proven it. They've proven that time and time again. Every time it gets bought up, the rip is sold immediately. They just want cheaper entries into their shorts, and they're getting it every time. And we can't sustain the price in the green. So I hate to sound so bearish again, even though we had some hope yesterday. It all really depends on how the price action looks like. Even though we've been selling off, if we were to get a green day tomorrow, I'm not sure you would really get all that much great action. If it gaps up and it starts looking flat, it might trade flat for the entirety of the day until around 2 to 2:30, and you can try to expect a move at that point. It could be up or down. Maybe people want to get positioned for CPI, so they buy. People want to de-risk for CPI, they'll sell. If it gaps down and it finds any buying, it's kind of shown over the past couple weeks that when it does gap down, it doesn't necessarily ever close that gap on that day. It might not close the gap again, like it hasn't really closed it for the past couple of days. So you might have very similar price action where it's a sell-off, little bit of buying, and then kind of flat into a not surprising red close for the day. Before we close the video, let's take a look at the Hong Kong Stock Exchange. It's still pretty red. It's down 0.46%. How did that affect? It kind of sold off our futures a little bit, but not severely as of yet. If you're watching this video late tonight, you can kind of watch the HSI futures if you want to kind of take a look at any possible movements on our futures, or just watch our futures. The other market is I believe the CSI 300, the ticker for the mainland stock exchange for China. That isn't really tech heavy. It's more like banks and agriculture or whatever. Nothing like the internet stocks and HSI. So thanks so much for listening, guys. Sorry that we're red again today. I hope that there's some type of positive catalyst specifically for Tesla. I hope core inflation cools so we can get a pump, but we're going to find out within a day and a half from now. Take care. Good night.